What is up, everybody? Logan coming at you guys again with another video. And today we're actually going to talk about the big move we're seeing here. And for me, we've been on the sidelines in the Discord for a couple of days, and we've had a pretty decent move up today. And we actually touched the red line, which to me on my 15-day, 10-minute chart is the 2.5 times the standard deviation from what the price typically is. And we're up in the nosebleeds on so many of these charts right now. I would say the only thing we're not in the nosebleeds is the 10-year weekly, which I have typed in just to show you guys like how far extended we are in the short term, but also at the same time, right? I mean, of course we are extended, but there is some strength behind this move. So basically, the dot plot shifted a little bit today, and the Fed announced that there's actually a potential for rate cuts next year, which I think is really, really wild. So there's a reason behind the move, and it's a pretty decent one. Doesn't mean it's going to sustain, right? But something just to kind of pay attention to as someone who's like a decently contrarian trader a lot of the time. I still looking at this from like a very non-emotional standpoint, this would be the point where I would begin to look at short positions. You know, I was shorting throughout a lot of this with call credit spread because of the basing, right? We had all of the basing on the S&P for the last 2.5 weeks, basically. It's all right here. Price just sitting, waiting to make a move. So it's going to be explosive when you get that next move, right? And if we flip over to the Discord, I made sure to mention that here, right? 2 days ago, I said we've been basing for about 2 to 3 weeks. So once the move occurs, there's a solid chance it's a large one, right? With a lot of that basing that we're seeing, here are the amplified trades. We've been on a really solid run of wins since about the beginning of September. A couple pullbacks here and there, but overall, here's the year of all the trades that we've taken. So you can see down here, we're just at about 7,000. And if you guys want to join below, I am running a $50 off if you use code BANG, BANG in all capitals. Just wanted to say that really quickly as we continue into this one. If you guys have yet to leave a like, I would appreciate that now. If you did, and a comment below would be awesome too, as we try to get to 14,000 subs by the new year. But one thing with like the P&L on this steady string of runs, and what's very important with this strategy, and here's my checklist, is I'm always really paying attention to the expected move, but also when we have events that are occurring. I like to sit out a CPI. I like to sit out on FOMC days as well because, you can try to anticipate the move, and there's a lot of people that do well on these days, but they're very algo driven, right? And there's 250 trading days. So for me, there's no reason for me to get caught up in like a specific FOMC day and get stuck in a trade, right? And kind of put yourself in a spot mentally to where you're like, gosh, this sucks, blah, blah, blah. Like I was doing so well, now I'm set back, right? Like my whole goal is to try to reduce that part of my trading. And just by skipping these days altogether with the credit spread method, right? With how we've been trading. So, the expected move for today, if we hop back to the Discord, right down here is 28 points, which is pretty dang low considering we have FOMC, right? And, we're at like 4,700 right now, 4,697. So, we've basically gone up to 2 times the EM high today. But even though I do love this setup, when you are getting paid to take a 2x EM high trade, it works out 93% of the time, roughly, right? On that 2 times the EM high or low, just getting to that spot. On FOMC days, I still like to just completely sit still and not take a trade. So that's one thing for me, and like trying to pay attention to this market now, but we are shifting into a very bullish time period, right? And the market's been moving quite a bit since early November to the upside. And not very often do we see it go from the bottom end of the standard deviation charts to the top side as quick as it did. So, you got to keep that in mind. But I'm excited to see if we get that follow through. I think my next plan of action from here is see if we get another 40 points. Is 4,700 not enough? The next spot I'd be looking at is like 47.25, 47.30, and trying to grab some call credit spreads up above 4,800. and if we do make the race to all-time highs, well, at least I waited until I had a really massive move against me to start to take a lot of call credit spreads, as this move's occurring. So it is really nuts though. December 6th, we're at 45.50. A week later, we're at 4,700 and higher. So quite a bit of movement going on there. Gap up, gap down. Really nothing for today. The VIX is super low right now. Volatility is actually at a 3-year low. So selling spreads right now is very difficult just because, right, you have to be very close. So I'm a little bit more conscious of this and expecting my time frame to shift maybe a little bit more to the 2 to 3 DTEs if the VIX continues to stay this low as well. 3 to 5 days, the market has been liking to move like 3 to 5 days green or red throughout the year at least, right? If we went through all of this, well, as of recent, it's been in one direction and it's been up, right? But we are on, about day 6 of green days in a row. So if we're going to take a little pause after this pretty massive move, I think we could see that in, 25 to 30 points from here. So I try to keep that in mind as well as I'm like selecting my strikes. But our levels, right? We had a lot of support down here. 4,600, once we crossed that, began to hold every single day. We had that little fake breakdown last week, right, where we went all the way down to like 45.55. And since then, it has just been a steam train up. So a lot of people getting in, a lot of people taking positions overall. So I always keep that in mind as well. Position sizing, that 6 to 8% of your portfolio, up to 10. So I don't like to start a trade with more than 10% of the port. It's a lot of risk to take on for like one thing to happen. Even when you're on a very hot streak like we have been this year, you still have to be very mindful of the trade you're taking. You don't want to give back all your gains for the year with, a couple weeks to go. So I try to keep that in mind as well as I'm piecing together my trades and thought process for the end of the year because, I would like to end this year strong and hopefully make another $10,000 to $15,000 by the time the month's over, depending on what setups we get. So looking forward to that as well. We are doing a couple giveaways in the Discord for Christmas time, which is fun too. I'm going to be just giving out gift cards over time up until Christmas. So really excited about that. And like you could see here, our last trade was at 46.45, 46.55 for Monday the 11th. We closed this SPX trade back here, that 2 DTE, and then we end up getting out of this one as well. And we just waited for CPI, and I'll look at taking a trade tomorrow, December 14th. So that's going to be everything for me in this video. Keep me posted in the comments how your guys' trading has been. My whole goal as of lately has just been making the same decisions over and over and over at the right time and trying to end the year strong so that we can start out 2024 really solid as well. But that's going to be everything for me in this video. Like I said, there's a promo code for joining the Discord if you do want 50 bucks off, and that's for every month going forward. That's my Christmas deal. So that's going to be everything for me. I will see you guys in the next video, and I'm going to be trading the market.